Hi everybody, आप सभी को मेरा सादर जय जिनेंद्र. I hope you guys are doing great. So without wasting much time, let us get started with our understanding of today's big fall in the market. So let us get started, guys. So guys, today I'm going to teach you a very interesting topic which talks about how does the market move from a tight range to a bigger range. How do these big moves come in the market, right? So when we talk about stock market or when we talk about prices, the prices always move from a small range which can look something like this, where both buyers and sellers, they are trading inside a tight range. And then we see another type of market which is called as a trending market, where the market moves something like this. Correct? So first we will have a look at the chart of Bank Nifty on a daily time frame. So what do you think was happening in the market while it was trading inside this range, this particular range? This is called as a ranging market. And once the market comes outside this particular range, it is called as what? A trending market, right? So there are two types of market. One is a ranging market and another one is a trending market. Very simple. Now we have to understand how can we make the best out of this concept to basically trade today's downfall. Now for that, I will take you to a shorter time frame. Let's go to Bank Nifty on a 15 minutes time frame. Now just look at the market. What was happening in the market for the last 3 days? Well, if you look at the market, this is the range of day one. This was the high and this was the low. Second day, what happened? The high and low was inside the high and low of the previous day. Now again, let's go to the third day. Even in this case, the high and low of the market was pretty much inside this range only. What does this mean? That now the market is in a tight range. And usually when the market is in a tight range, it leads to a trending market. So remember one thing, market does not always move straight, right? How it's going to move is that from a tight range, it will lead to a bigger range, again a tight range, and then it can give either a breakdown or a breakout. Correct? So market moves from a small range to big range. Is that what you have understood? And if you look at today's market, it gave a big fall, right? Almost a fall of 1200 points. So how to catch a fall like this? It's very simple. If you see, I was talking about the high and low of day one, high and low of day two, high and low of day three. Now, whenever you want to take a trade into a range breakout, correct, you should always mark the high and low of the previous day. And now that you know, for the past 3 days, the market has been in a range. Now we can look for what? Breakdown or a breakout trade. Obviously, the closing of third day is near its day low, which is suggesting strength of the buyers. Correct. Now, when do we know that the buyers or sellers are strong? Because if the buyers are strong, we want to go long. And if the sellers are strong, we want to sell the market, right? Now, the simple thing which you can do is after any consolidation which has happened, you're supposed to mark the previous day high and previous day low, correct? And once you have marked it, as soon as the previous day low is taken out, we look for a selling opportunity. Now, if you're following us on Instagram, you know that this is one particular type of trade that we take on a very regular basis, correct? And today as well, I had a live session with the October batch wherein I had this trade open and I was discussing how I'm expecting a big fall to happen in the market and how I added to my win position. More on it, I'll be discussing over the weekend, where I'm also going to have a talk with our learner, Bhargav, where I'll be discussing his big trade that he took. Now, very simple, try to understand. As soon as we have a closing below this level or above this level, we look for either a shorting opportunity or a long opportunity. Let's go and have a look at the playback series, right? So let's just go back to it. As soon as we have a breakdown from this level, right, we want to sell the market, right? And the next question should be, where should I put my stop loss? Now, if you're a very conservative trader, make sure that you are putting a stop loss at least above the entry candle with some buffer. However, if you're an aggressive trader, you can also use methods of retracements to take intraday trades as well, right? So we can have a different class itself on retracements, correct? Now, this is how we take trades, and you just look at the kind of falls which happen. But the reason for this fall to happen is the tight consolidation which happened over the last 3 trades, right? And if you want to have a look at the trades which we have taken, you can also refer to our Instagram channel, right? And wait for the weekend where I'm going to have a very detailed session on how to run profits and some of the personal trades that I have taken, right? Now, one more thing, everyone, one more thing. Let's have a look at the chart of Nifty. Now, we were discussing Nifty the other day as well, that we may see a pullback happen in Nifty. However, what happened at this point of time was market started to consolidate and it took resistance at the high of this mother candle. So in Nifty, we had particularly 4 days of tight consolidation. And now if I take you to the intraday chart on 5 minutes time frame, just see again how beautifully the market breaks the previous day low. This was the previous day low, correct? Over here, this was the previous day low. As soon as the previous day low is taken out, we can see a good breakdown in the market. Now, I will just give you one very extraordinary advice as to how to run the profits. Now, usually in order to run my profits, okay, I don't use support and resistance. One simple thing which you can use is the moving averages, right? The moving averages are a great way to run your profits and also to re-enter into a trade when the market strength is very, very strong on the downside. So if you had shorted over here, right, the market stayed below the EMA, right, until this point. So this was your exit trigger. Also, how to enter or re-enter into a losing trade, how to enter or re-enter into a winning trade, it's very, very simple. Look for shorting opportunities, right? As soon as the nearest swing low is broken, you can again short the market with again the EMA as the SL. And if you see, after that, the market has been respecting the exponential moving average. Now, this is a very healthy advice given to you as to how to run your winning trades, right? And I also use the EMA in order to cut my losing trade. So it's very important as to know how to run your trades, also how to cut your losing trades, right? This is very, very important. Now, again, just try to recall what did we discuss in today's video. First, we want the market to consolidate, right? Once we have a consolidation of 2 to 3 days, then we can look for this breakout strategy. Also, what did we learn? The market is never going to stay in a range always. Market always moves from a smaller range, right, to a bigger range. And we want to be a part of this bigger range if we are a breakout trader. However, if we are a reversal trader, if you want to trade something like a day high, day low reversal, then you want the market to be in a range. So whenever you are trading the markets, always know as to what type of a trader are you. Are you a range breakout trader or you are a range trader itself who wants to trade inside the range? So I hope you got very, very exciting insights in this particular video. Now, this was a learning video. I hope that you keep watching this video again and again. Also try to backtest this. So how do we actually understand a system in detail? So let's go to Nifty Bank again. You just look at the markets. How do the markets behave? This was a strong period of consolidation and look at the up move, correct? We again had a small period of consolidation and then again an up move. Again, look at this, a good amount of consolidation and then an up move, right? Now, try to look at the markets in this way, okay? Create a system for yourself as to how you can define your entry and exit in a very objective manner. Once you have identified and once you have identified your entry system and you have a trading plan ready, you will be able to trade fearlessly and also with a lot of calm and composure and also with a lot of peace, right? And that should be the motive of trading. You should make your trading as much as stress-free as possible. So with that note, I really hope you learned something very, very important. You learned how to enter. You learned how to trail your stop losses. You learned where to put a stop loss in first place. Correct? So with that note, thank you so much, guys. Thank you so much.